The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Good morning, everyone. I wanted to start the show with the, like we usually do, looking at the German DAX. As you can see, that pattern that posted yesterday was just spot on. And now the old highs that we had are down about another 100 points. That would be the first spot, to look for a correction, because this is one that has got a really big pattern involved. You see, this has taken quite a time to do this. It's well over 3 weeks. So this should have a very good reaction to the downside. The fact that all of those ABCD patterns and the butterflies are now complete. That has nothing to do with what our market is doing, but our market is actually looking much more bearish than the one for the DAX, but that's neither here nor there. But anyway, keep an eye on that, because we'll be watching it each day. We follow it because it is a very heavily traded vehicle throughout the night, and especially during the day in London and Europe. Whenever we travel over there, our friends are trading that. They're certainly not trading the E-mini S&P. For those of you that don't know, they do have an E-mini DAX, because the regular DAX contract is a margin of $22,500 euro. So you can imagine how that's about half the value of a regular S&P back in the old days. But it's a very, very active account. When that thing moves 100 points, that's equivalent to $2,250, which is a big move, because it moves 100 points up and down, all the time. So watch it very, very closely if you trade it, because you could get hurt badly if you don't either use the E-mini or actually go with a very, very conservative stop in that market. And the key there is conservative, and I don't know how to handle that. Now, I wanted to mention something in the room this morning, in the chat room here at Tiger Den. They've been talking a little bit about Martin Armstrong of Armstrong Economics. He is probably a true genius, I guess. I've met him twice in my life. The first time, I think I don't know if I ever told this story or not, but I was a guest at the Foundation for the Study of Cycles in 1988. My book had been very popular, Astro Cycles, A Trader's Viewpoint. People from the Foundation from the Study of Cycles were there. Tudor Jones actually owned the Foundation for the Study of Cycles at that time, so I was asked to be a speaker. And at the cocktail party the night before, I had met Martin Armstrong. I'd met him once before when I was at Drexel, but I didn't remember it. He did, but I didn't. And anyway, I was at the cocktail party, and I was talking to this young girl along with, I forget who else was there. And anyway, she asked me, she says, "What did you think of Martin Armstrong?" And I said, "Well," I said, "there's no question he's brilliant." I said, "But my goodness," I said, "the guy has got an ego, bigger than anyone I've ever met." She says, "Yeah, people say that about him a lot." I said, "Do you know him?" And she said, "Yeah, he's my fiance." And sure enough, he comes walking over, and he laughed about it and everything. But when I was giving my talk, I was up at the monitor room in this brand new building in Orange County, and they had a huge screen that was all electronic that came down, and all the people, there were about 250, all the people had their own little desks with little lights and telephones. I mean, it was just like a NASA or something. And so I was, getting ready to give my talk, and I was doing pretty good, I thought, in the first 15 minutes. And they had the screen coming down, and I took the marker and I went onto the screen, and I marked on the screen, and that it actually ruined the screen. Anyway, that everybody started laughing, and I got very, very scared. But then when I saw what I had done, I forgot about it. But that was an embarrassing moment for me. I've had a bunch of those throughout my lifetime, but that was one that I remember most vividly. But Martin is a really smart guy. And I know you folks are posting some of the things that he's talking about that are going on in politics right now. And believe me, it's the most difficult thing in the world to follow is the politics part. But he's a smart dude, and he has his pulse on a lot of different things because some really, really smart people listen to what that boy has to say because he is quite smart. If you have an interesting, go in and Google him, and you'll see that he was in prison for quite some time unjustly. He never even had a trial. They wouldn't charge him or anything because he was a I forget what they call that when he wouldn't. I can't remember what they call it. You guys will help me out here in the den. When he wouldn't give a judge contempt of court. He was in contempt of court for like 60. Thank you very much, Mr. Z. Yeah, he was in jail for contempt of court for several years. So who knows? Okay. Okay. Thanks for the kind words, folks. Anyway, that was my extent of my experience with Mr. Martin Armstrong. I believe he's a doctor, but boy, he's smart, man. He's a mathematician, and he really's got a great historical precedence of, what's happening in the market. Okay, now let's talk a little bit about the market that is getting a lot of news, and that is our good friend Tesla. We want to take a look at this because this is something that we should all remember. Now, remember, just recently we had the dude David Ackerman from Variant. I think Valiant or Variant. I don't remember the name of it, but he was very involved in that stock, and it went from 198 to 12 or 11. Now we have a stock now, Tesla, that many people are very, very bearish on, particularly Jim Chanos. And believe me, he is a really smart guy. Now, I don't know if Chanos has exited his position or not, but he's come out several times over the past months saying how, he thinks that Tesla has got a very bad business plan and it's not going to work. But if you look at this chart today, this is not a bad business plan, folks. This somebody wants to own this stock that knows something about it, is my guess. Now, the one thing that you ought to watch here in Tesla is that if you go to the low on February of 2016 up to the high into April of that year, it moved over $139 a share. Then it pulled back to right near the 61% retracement, exactly at 707. And actually, the difference between 707 and 618 for trading purposes is usually not very much, but with $180 stock, it certainly can be. That has completed now an ABCD pattern. We're within about, I think, around $300 a share, completes that because the first leg went up 139. You add 139 to the other one, and that comes out to 309 as the price target. Now, we've had some gaps on the way up and everything, but the reason why I'm bringing this up is that, he could be totally wrong about Tesla, and I will tell you this, I don't believe that he has the same type of, well, you don't really know, but I don't think he has the same type of ego attached to this as Ackerman did with the Valiant, but who knows? He could have been out of it 3 months ago. We don't know. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we've been watching the gold market very closely overnight. We got up to the 61 level, well, actually we hit 62.20, which matches that almost the old high at 64.50. Now we're backing off a few dollars from that level, but boy, it appears like silver and gold really want to get moving out of here. I'm not sure if it's going to be today or not, but you know, it looks pretty interesting. Kind of keep an eye on the 1257 level, folks. There might be some important support there. You know, somewhere between 1257 and 1256.5 on a short-term basis. But longer term, it's beginning to look like it really wants to get out of here. We're above the 78% retracement in both silver and in the gold. It's just the platinum is lagging badly, as is the XAU, you know, the gold silver miners. So those are acting, you know, relatively poorly compared to the others. But if we keep an eye on this, I think that if it breaks out above that 1265, it will most probably be a valid breakout. That's the way I would you know, gauge it today. So just kind of keep an eye on it, because boy, you know, you gotta give it a lot of respect, folks, because it's fought its way back through a stronger dollar, weaker dollar, doesn't make any difference. Gold and silver really seem to be wanting to get legs on this thing, and I know that if they get this thing moving to the upside quickly, it could go a very, very long way. So that's the main thing that you want to be able to do. Okay, I had one other question yesterday about that chart that I posted for Amazon. I'll be happy to bring this up to you again. This comes from our good friend Jim Bartolioni, V50 Partners. Jim, most of you have you've heard him as a guest on my show before, but he was one of 4 F-16 pilots that I have. They were all part of the same fighter squadron, and they all have these cool nicknames like Spider, Bart, Rooster, and Bucky. And these guys are really, really nice fellows, and I was able to have the opportunity to meet them all here in Tucson throughout the years. and we've remained friends. But these guys really are into trading very heavily the technical stuff. But this Amazon chart, goes back 20 some years, actually 30, let me see, yeah, 20 years. And as you can see, we do have a extended move here in the Amazon, and it hit the exact ABCD price of this last swing up yesterday. Whether that's going to hold or not, I don't know, but, at least it held it for the first time. But the reason for the chart is the fact that we have a level of divergence like we haven't seen. In other words, the relative strength of this market is not nearly as much as it should be, and also the volume is very, very low, but that's neither here nor there. What we're trying to do here is just to point out the pattern. By the way, I don't I'm sorry you guys make me laugh, but I don't know whether the price of Amazon. Could someone tell me where the Amazon closed yesterday, please? I am not even sure. The high that I had seen, it was 892. I didn't know if it got above that or not. I mean, at that price level, it's not going to be very much. So if someone gets a chance to let me see where Amazon is trading this morning, it would be helpful to me. So anyway, we'll see how these things get going, and we'll move on to the next thing. Matt, did you get your email problem straightened out with me? 893. Okay, it's trading at 893, so that's the same high that we've been looking at. So we'll watch that very, very closely. Now, as we look at the overall market here, we should be down a little bit. We had a little bit of a rally yesterday. I just wanted to bring this up to show you what happened. This is the Dow Jones, and this is the one everybody watches on TV, and that's not the real market, but we'll get that fixed for you today, my friend. Okay, there we'll take a look at this Dow Jones. As you can see, we made that 61% retracement up there at 21,000. Now we've been coming down. Each of these rallies have been pretty substantial. We had one yesterday for well over 150 points. It stopped exactly at the 61% retracement of the high we made on Friday. And so that tells us that we're still heading to the downside. Our original target on this particular one is at 20,100. And that will fill the second gap, or actually the third gap that we have in the Dow Jones. This is the futures, and the Dow Jones, this trades at a discount, of course. So the futures would be equivalent to 20,100, whereas the Dow Jones will be 20,200. So this is what our target is. Now, if we move another 100 points higher today, then you will be able to say that this is something that is probably going to have legs, and it's going to move to a much higher level. But right now, that's what we're watching, very, very closely here. This market has some very negative things going for it. If you remember, one of the things we posted the other day was the New York Stock Exchange Index, and we had this 135 pattern, and we were down yesterday, and it looks like we're going to be down again today. So this pattern is certainly in effect too. In fact, all of these patterns that we're seeing in the stock indices are bearish, folks. They could change in a heartbeat, but they have good news coming in, and not much is happening. As the market rallies, it immediately gives it back up. But we have major signals in the Dow, even the NASDAQ. We had that big move in the NASDAQ that was nothing more than a large ABCD pattern, and that one sold off also, but it comes back rapidly. So it's really hard sometimes to stand in front of these things. That's why you've got to use some type of stop protection. You don't want to get in a situation like we have with the Tesla. I mean, you don't want to fade that. There's no mistake in being wrong, folks. The mistake is in staying wrong. Don't stay there. I mean, get out of the way. You certainly don't need to to be moving in any direction other than in the direction of the trend. And even if you're trading against the trend, you can still protect yourself, because you're not going to be wrong all the time. And if you don't use a stop, you're telling the market that I'm smarter than you, Mr. Market, and you're not going to fool me. So I don't think that's the way to do things, but we'll see how things move from this level. Okay, Now we have we're trading at around 23.50 in the S&P. It made the 61% retracement of yesterday's range overnight. That came in at the 23.46 level. We rallied about 4 points from that level. So we'll see if this is going to have any legs or not. Now we did get below 50. Switch over to crude oil for a minute. We did get below $50 a barrel in crude oil. And that tells us that we're probably in the midst of a pretty good rally. Well, we rallied almost about 3/4 of a barrel, $1 a barrel already today. So we could be looking at something might have legs to the upside, because there's strong support down there at $50 a barrel. We've said that many times. And even Bill Meridian, who will probably be on our guest next week, will probably be there. By the way, we'll be right back. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I wanted to start off the second half of the show by reminding you that we're going to have a special guest tomorrow. Norm Winsky from Astro Trends will be on, and he always has some great information, and he's also alerted us through his newsletter that there's a lot of rocking and rolling going on in April, and we can see that in some of these things already. Okay, let's take a look here at July sugar. The reason why I don't trade sugar very often, probably a couple times a year, but as you can see here, we have a perfect ABCD pattern coming in at a 1.27 expansion and also a 0.618 retracement from the lows in January. If you remember what H.M. Gartley said in his book, Profits in the Stock Market from 1937, he said, look to buy that first ABCD correction in a bull market or sell the first ABCD correction in a bear market. That's on page 222. That's where he describes the Gartley pattern in detail. He took 2.5 pages to describe that pattern. Nowhere in that book did he spend 2.5 pages describing a pattern. Even when he described the ABCD Thunderbolt pattern, he did that in 1 page. It took him 2 pages to do the Gartley pattern. So, and he didn't put the ratios in. All I did was add the ratios, to try to give it some clarity. But keep an eye on July sugar here. We'll follow this a little bit. I don't trade it. I don't. There's a reason for it. There's going back to the old days where I don't trade softs, cocoa, coffee, or sugar, or orange juice. But in 1969, we were trading at Conti Commodities, and sugar was trading at 66 cents a pound, which was, right now it's at 16. So you can make 66. It's never seen that. It had just finished 22 days in a row going up, and I think 12 of those were limit up, as I recall. It was one of those, straight up moves. And the manager of the office there was Roy Fassel. He had managed the offices for Clayton Commodities, which was across the street. And then when Conti Commodity came into town, they bought that office, hired Roy to run the commodity office for Conti. And so Roy was there. And Roy sold sugar 2 cents from the high in the whole market. At 66.11, I think he sold it at 09 or something like that, and the market dropped to about 66.01 or 65.88 or so. I don't know. It was a couple $100, and he was pacing up and down in the office. I remember this because he was pacing up and down in the office. He said, I shouldn't have done this. I shouldn't have done this. I shouldn't have done this. And somebody's popped up his head. Well, get out of that, God. He did, well, the darn thing. He said, if you feel that way about it. So he went into the office, he closed his position, and immediately after he closed it, it went limit down. And it went from 66 to 6. Yeah, well, that's the way it goes. Some days it's chicken salad. Some days it's chicken soup. You just never know. Okay, we'll take a good look off that, and we'll see what happens, what's going on. Okay, let's take a look here. Well, that in 2016, folks, we were talking about sugar. All that was a 1.618 expansion, and it was also a 33 or a 382 retracement off the all-time high. And it was also a 78% retracement of the high of the previous year of 2015. So we'll see what's going on. So we've had a couple questions about the grain markets. We haven't forgotten about those, folks, but we're still coming down in the beans and the oil and some of the others. But as soon as we see some type of bottoming pattern in here, we're going to be looking to get long wheat and corn and also beans. We're starting the planting season is starting now. And so we'll get a pretty good idea what's going on. We have to watch the weather here because as the weather gets really wet, the acreage sometimes can shift back and forth, between beans and meal, beans, wheat, and corn. So you've got to be a little bit following this. This is why we have Rich Anderson on, is to give us some of our information that we really need. Okay, now we want to get on to some of the other markets that we follow quite a bit. One of them is the British pound. We had this on the air yesterday. We were talking about this British pound because we had gone up to a perfect. Hold on a second here. Someone's asking me a question about wheat, but let's do this British pound first. You can see we went up, made a 78% retracement. It was an ABCD structure. You can see that in the red outlined ABCD pattern, and now we've come all the way down to the 78% retracement of the whole move, which is pretty strong support at 24.25. So I expect it to hold that level, well into the well into the rest of the day. Now we have a question about July wheat. July wheat has had a pretty good bottom. You know, we had that major Gartley pattern down there at 436. We went into the crop report. We happened for our 24/7. We happened to be long that. I did not want to take the risk of going into a crop report for our folks, and so I decided to take the I think we made a 2-cent profit or broke even. I put it down as a broke even trade because I just didn't want to take the risk. It dropped about 6 or 7 cents from where we got in it, and then it rallied 10 cents. But that doesn't matter. The matter part is I didn't want to take the risk because the risk is more important than the profit. Because if you focus on your risks, you're going to be far better off than if you focus on your profits. Remember the words of Paul Tudor Jones: winners think how much money I can lose. They're always worried about their capital and how much risk they have. The losers think how much they can win. And that's where they get into problems because they go to places like Las Vegas where they have all these things, or in the Powerball where they're telling you there's 300 million, 400 million, 700 million, but they don't tell you that. By the way, folks, Tommy O'Brien sent out a fabulous article on the NCAA brackets and the betting in that and the probabilities. If you get a chance and you'd like to read something really exciting, ask Tommy O'Brien at TFNN if he'll send that out. He might even have put it on the front page. I don't know, but it's a great article on probabilities that relates to trading. So that's the main thing. Remember, the trading is not like any other thing. It's not like gambling. See, in gambling, you have to rely on a special set of rules, and it's all predicated on an event: the spin of the wheel, the roll of the dice, the toss of the ball, the blow of the whistle, whatever it happens to be. And then the game starts, and you can't change your bet anytime. With trading, you can be in 1 second and out the next second with a small incremental commission cost. This is not the same thing as people that are doing speculative gambling. And believe me, there's some guys that are really good at that gambling stuff, but this old cowboy is not one of them. I never thought that I would. I do it for entertainment purposes. I play a little poker. I'm a tiny bit above average. I'd say about 50.00009, and that'll fluctuate back and forth. But the good thing about gambling is, you're right, Marshall. It takes all your money, and then you don't get to play anymore. The same thing here. You can get into a negative position, and you don't have to worry about that. So we'll see how some of these things are going. Let's get back to the crude oil a little bit, folks. We have really strong support there at that 50 level, and we want to be able to watch it to see where we are, with some of these things, and whether it's going to be the case or not, we'll be able to look at it. So 877-927-6648.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new market-safe core commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays. We broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and I wanted to switch over to the U.S. dollar here because, that's a big part of everything that goes on in the world. And if you take a look here at the U.S. dollar chart, you're going to see, market that's been in a downtrend since right around Christmas time. We have a really good possibility of getting down to this 97.48 level, but this is going to be a critical day today because if we can get the dollar index above the 101.20 level, that will tell us that this ABCD market that we had 5 days ago is probably made a bottom and we're getting ready to go higher. So this is a critical day for the dollar, also for the euro. All of those things tell us that that's what we would be watching very, very closely. So we want to keep a very close eye on this dollar index, which is equivalent to the euro, which is at the 106.30 level. If we get below that 106.30 level, it's most probably not going to do very much. That would be my guess. So just keep an eye on that as we look at some of these things. Let's see how we're trading this morning. I think we're up, we're rallying a little bit. We got up to 23.53, so we're still down a little bit on the day, but we should be able to watch to see how some of these things are going to be coming through here for the rest of the day. There should be a little bit of resistance somewhere between 23.56 and 23.72, I would think, but that could only be short-lived. Now, the bonds have started to sell off just a tiny bit from the 78% retracement. The Treasury notes, they went a great deal above the 78% retracement, so that's a situation that we could be looking at where the short-term rates are going to go lower, where the longer-term rates might go higher, the widening of the yield curve. Whether that occurs or not, we'll have to wait and see. I have another question about the wheat. I think the strategy here, if you want to get long the wheat, look to buy a 61% retracement. We had a 17-cent rally off of the low. Look to buy a 10-cent pullback. So that would take you down to about the 434, 435 level, and then you could put your stop below 427, and then you could look at it that way if you wanted to watch that area. So anyway, keep an eye on that. That's going to be really interesting to see these grains unfold as we come out through the rest of this growing season, which, believe me, we're going to have a long time to look at some of these things because the growing season takes a long time. In all the years I've been doing this, I've never seen a year where we haven't had at least, and I'm saying at least one major crop scare, if not one or two. Sometimes they're influenced by the supply demand. Someone's asking me a question. I don't know what NUGT is, Mike. I wish I did. Well, I think it's that heavily weighted ETF for gold, isn't it? I don't know. I think that's what it is. I think it's a 3 times weighted. Yeah, it's gold. Yeah, it's a triple weighted GDX. There you go. If you want, if you can't pick the brackets in the NCAA tournament, then you might like it. So I particularly like it right here. Your risk here is $3. If gold breaks $3 from here, I don't like Nugget. But if it can hold this 1256 level that we just did a little while ago, I think it's got a chance. So you don't have to risk much here. That's the bottom line. It's either going to turn right here or it's not going to turn. And of course, that's my opinion. And opinions, are like armpits. We all have one. And anyway, watch this closely because it does have a chance, but it's very, very low risk at that point. That's the main thing of trading some of these things is if you're using pattern recognition and the pattern doesn't work the way that you like, just stand aside and, find another strategy because there are other patterns coming down the road all the time. You don't have to worry about it. One of the things I'm looking at in the gold market here is let's just take a look at what's going on with the gold and the Australian dollar. This has had a very, very strong correlation, but as you can see here over the past 2 weeks, the Australian dollar has been coming down and gold has been going up. And as a matter of fact, I think the Australian dollar is getting right down near that ABCD pattern as we speak. And here again, we have the Australian dollar going down and the gold going up. That just doesn't happen very often, but that is, in fact, what is happening. So these are just some of the things. You like to see everything lined up together, and you don't always get that. But let's just look at this Australian dollar quickly, and then we will see how we're doing here. And we'll see here. Yeah, we got all the way down to 75.45, so that's a major support here in the Australian dollar. Just give me 1 second to put this in here, because this would give you another idea. Oh dear, I should have bought that Australian dollar. I better do that now. Hold on 1 second here, folks. Let me get this ready here. This Australian dollar is really ripe, folks. Hold on 1 second. I can't do all these at once. You're asking me too many questions. Let's just get this one here because this Australian dollar looks very interesting now. Oh, dear. Here it is right here. Let's get it up here. We'll take a quick look at it. This is, if you want to talk about buying the nugget, there you are. You're at 75.40 in the Australian dollar. It's at 75.58 right now. You don't have to risk hardly anything there. So if you're going to trade the nugget against this, and believe me, this correlation has not worked for the last 2 weeks, but the last 2.5 years has been working pretty good. So I asked myself the question, why isn't it working now? It's either a major bottom in the Australian dollar or gold's getting ready to take off, one of the two. So that's my guess. Keep it in mind. Anyway, below 1256, I don't think the gold will be any good, but we'll see. All right, next question that someone asked is about the VIX. Boy, Mike, you're going to ask someone who knows because I have no idea. I mean, we've had no volatility in this market or not. My strategy is every time a rollover occurs, I go into the next one. I go out usually 2 strikes out, and I buy a call. And the last 2 haven't worked. The one before that, basically was break even. But I still buy a little bit all the time. I always have a position on in that VIX through calls because I know if it pops, it's going to be a big one. And I figured you're going to have to be right once out of 10, but we'll see if that's going to be the same as usually the best way to do this is to wait for the pattern to complete, and that's what I do. I look at the VIX index. When I see the pattern, I go out and I buy the call, and I say, okay. But you remember when you buy a call, 85% of the people who buy calls, they don't make any money. It's that 15% of the time when it does work that you make all the money. So you got to kiss a few frogs before you find a princess, boys and girls. That's the main thing. Okay, $8.99 at Amazon, another all-time high. That's $3 above where I thought it was, but I am not in Amazon. My order on Amazon, yeah, it's those 9 losses that drive you crazy, Terry. You're right. But my strategy in Amazon was totally different. I wanted to sell Amazon on the way down. I don't want to sell Amazon until it breaks at least $20. Because then, by the time that's broken $20, everybody that had bought it up here now has a loss, much like what we have in the Dow Jones when we hit 21,100. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I've posted the chart for the July wheat, and as you can see, we had that big head and shoulders pattern. Went into the report. We had a nice rally. We're near the higher end of that rally right now. And what that usually means is we're probably getting ready for an ABCD structure that'll take it up to around the 450 level in the wheat. So yesterday's pullback held at the 61% retracement, and now that sets up a small ABCD structure that would take us up to the 450. So watch for retracements to buy it. Like I mentioned before, around 11 cents will probably be all you get. The wheat has been the most bullish of any of the grains, followed by corn And then, of course, soybeans is still bearish, but boy, soybeans is looking more and more bullish when you look at oil and meal together than it has in quite some time. So we'll watch this very, very closely. I'm going to put the chart of the NASDAQ up here, folks, because it's very important to look at this. You'll see that we've had the ABCD pattern form up at the 454 level. We had a really big break yesterday. We rallied back to a 78% retracement, and then we've been chopping around between 54.36 and 54.06. There should be some pretty strong resistance at 54.42, up about 20 points, and there'll probably be good support. Well, there already was good support this morning down around the 54.08 level. Going below that, then you set up a much more sinister move to the downside. But right now, it's still in a bullish pattern as opposed to what's happening in the Dow Jones and what's happening in the S&P and what's happening in the New York Stock Exchange Index. All of those are headed lower, but it's just the one for the NASDAQ that has held everything in. And that's because you got stocks like Amazon in there that's, going bonkers. It's hit almost 900. And I think 899 was the high so far today. But whether it's going to get much above that, we'll wait and see. 877-927-6648.